Let's dive right in. Welcome, stakeholders, investors, and industry leaders to this 2026 Global Outlook Explainer. If you're allocating capital, managing a complex supply chain, or steering a global fashion brand right now, you already know that the worldwide leather market is no longer a monolith. It's totally transformed into this incredibly dynamic landscape of shifting opportunities. So today, we're mapping out exactly where the smart money should go over the next few years, breaking down all the complexities of these regional market trends into a highly actionable investment briefing.
So, the million-dollar question we need to answer today is pretty straightforward. Where exactly is the market headed? I want you to take a second and really consider your current strategy. Where does the absolute greatest growth potential lie for your capital allocation in the coming years? Are you playing it safe, betting on the steady reliability of legacy markets, or are you hunting to capture the explosive, rapid-fire expansion of emerging frontiers? Well, by the end of this explainer, you're going to have a clear, data-driven map to help you figure that out.
Here's our strategic roadmap for today. First, Europe's push for sustainability and luxury. Then, the US focus on functionality. Australia's demand for quality. Asia's explosive market growth. South Africa's emerging premium sector. And finally, we'll wrap up with a strategic market comparison.
Starting things off with Section 1, Europe, focusing on sustainability and luxury.
Look, Europe is always going to remain a vital anchor for any high-end leather brand, but the strategy for extracting value there has fundamentally changed. It's honestly no longer just about heritage and slapping a famous logo on a bag. It's now deeply, deeply tied to environmental responsibility. Consumers in major hubs like Italy, France, Germany, and Spain are aggressively driving the market toward eco-friendly tanning processes and circular fashion. They demand premium craftsmanship, absolutely, but it has to come from recycled or upcycled sources. If you're investing in the European market right now, your capital absolutely must go toward transparency and traceable luxury accessories. The modern European luxury consumer will literally not open their wallet unless a brand can prove its environmental credentials right alongside its legacy.
Moving on to Section 2, the USA, where it's all about functionality and lifestyle.
Now, unlike Europe's intense focus on sustainable luxury, the American consumer is totally prioritizing practicality. They want everyday use and seamless lifestyle integration. American professionals are highly willing to pay top dollar, but their investment goes into durability and aesthetics that actually serve a function. We're talking high-end tote bags, backpacks, travel gear, and business bags. Plus, the US market is being aggressively reshaped by direct-to-consumer online brands. Buyers want transparent sourcing and ethical manufacturing, sure, but they expect it delivered flawlessly to their doorsteps. So if your strategy involves the US, your capital should really be flowing into robust e-commerce infrastructure and highly functional, durable product lines.
Next up, Section 3, Australia, focusing on quality and durability.
Australia is fascinating because consumers there have practically drawn a line in the sand against fast fashion. They prioritize lasting quality above almost everything else. Their buying psychology is driven by travel bags, rugged outdoor accessories, and tough work products. Australian buyers are hunting for long-term value. They want timeless design and ethically sourced gear that can genuinely withstand a highly active outdoor lifestyle. They aren't chasing seasonal trends, they are looking for lifetime pieces. Brands allocating resources to Australia absolutely must focus heavily on the structural integrity of their leather goods and communicate a compelling narrative of rugged, enduring quality.
So, we've just unpacked Europe, the US, and Australia. In these mature markets, your investment strategy is really all about steady value retention, maximizing those high margins through sustainability, lifestyle functionality, and durability. But as we cross over into the emerging frontiers, the whole playbook flips. We shift from value retention straight into explosive growth, rapid expansion, and aggressive premiumization.
Which brings us to Section 4, Asia, and its explosive market growth.
For stakeholders looking for aggressive, high-velocity returns over the next decade, Asia simply has to be viewed as your strategic anchor for future capital allocation. It is, without a doubt, the fastest-growing market globally. We are looking at a perfect economic storm here. Surging disposable income combined with rapid, completely unprecedented urbanization across China, India, Japan, South Korea, and Southeast Asia is creating a massive wave of new demand. Literally millions of consumers are stepping into the middle and upper middle classes every single year, and premium leather accessories act as a primary status symbol representing that upward mobility.
And you know what's truly pouring gas on this unprecedented growth? The youth. Young Asian consumers are fundamentally rewiring the global leather landscape. They are incredibly strategic, balancing a desire for that legacy luxury appeal with a demand for innovative, modern design and accessible price points. With the massive expansion of e-commerce channels in the region, brands can't just export their European or American strategies and expect to win here. It won't work. You've got to invest heavily in localized digital marketing, tap into the premiumization of everyday fashion, and cater directly to a highly connected, younger demographic that loves buying luxury online.
Let's shift gears to Section 5, South Africa, looking at emerging premium demand.
While Asia represents this explosive volume, South Africa is a steadily developing market that is showing some highly promising targeted premium demand. The crucial driver here is a really unique product mix. Beyond just your standard handbags and wallets, there is a distinct growing demand for corporate gifts and bespoke fashion accessories. We're seeing a rapidly rising popularity of local craftsmanship and authentic, quality-conscious leather products among South African buyers. They are actively seeking items that perfectly blend international style with local practicality. For investors and brands, this is a market where establishing a premium footprint early could yield massive long-term brand loyalty as the broader economy continues to mature.
And finally, Section 6, our strategic market comparison and executive summary.
Bringing all this regional intelligence together, it's time to weigh your strategic options for 2026. The bottom line? Brands have to adapt their sourcing and marketing to meet these completely distinct regional profiles. If you're targeting Europe, your capital goes straight to sustainable tanning and circular fashion. If it's the US, invest in highly functional, durable D2C products. For Asia, you must fund aggressive digital expansion and tap into youthful premiumization. Down in Australia, double down on timeless, rugged quality. And in South Africa, focus on establishing an authentic premium presence. A one-size-fits-all global strategy is completely dead. Regional specialization is literally the only path to maximizing your investment in the 2026 leather market.
Which brings us to our final strategic thought for the day. Which of these markets offers the absolute biggest growth opportunity for your specific strategy? Based on the data we've just unpacked together, where are you going to be allocating your capital and focus over the next 24 months? I challenge you to take these insights straight back to your boardrooms and really scrutinize your global footprint. If you found this strategic briefing valuable, be sure to subscribe to this Explainer series for more deep-dive, data-driven global industry insights. Thanks so much for joining me, and I'll see you in the next analysis.